Dan has a really good way of articulating what is important and also what is challenging about clean energy and the deployment of clean energy. And so he points to he talks about 3 points in a triangle: technology, finance, and policy. And we actually have all 3 points here represented on the panel. But what's great about each of the members of the panel today is that we have each of them, while representing sort of one of those 3 points in the triangle, also extremely knowledgeable about the other points. And so we're going to try and draw on how that triangle interacts here as we talk about the vision for 2030 and the energy systems of the world in 2030. So we're going to start with a little bit of a broad question, and it's going to go to you, Dan. What does the energy system in 2030 look like? How do we get there?
Well, the interesting thing, I think, is that 2030 used to seem like a long way away, but it isn't. I was thinking this morning, 2050 is the new 2030. We're almost at 2030, and as I think about this, I guess there's 3 things that come to mind. One, clearly, wind and solar are going to grow real big. And I also think not just land-based wind, but also offshore as well. We're going to see some big growth there. The question is, what about some of the other renewables? I haven't counted out geothermal, biomass, and of course hydro. Big. It's our biggest renewable today. And there's a lot we can do with it to help manage the grid. I actually think carbon capture and storage is going to arrive in a fairly serious way by 2030. I particularly focused on what you can do with CCS in the industrial sector. We heard Bill Ford yesterday talk about capturing CO2 in their factories and using it to make plastics. ADM is capturing it today and doing stuff with it. Exelon is building a natural gas-fired power plant with carbon capture. So I think that's the second one. The third one, I'd say, and it really is a question, is where are we with nuclear in 2030? We will have pretty much run out of the decades on the current fleet of nuclear reactors. Those will be pretty much gone. And in the US, are we going to be building the next generation? I'm on a task force to the Secretary of Energy, and we've been asked this question: what would it take to have a next generation of reactors starting in 2030 at a multi-gigawatt scale per year? And we're trying to answer that question. What would it take in terms of policy? What would it take in terms of finance? What would it take in terms of technology? And it's an open question, but I think we got to answer it. And it may be a big public-private partnership that we put a lot of money into it. And the last thing I'll say is there's a lot of interest in the Congress these days on both sides of the aisle in doing that. And please, let's not forget energy efficiency, the low-hanging fruit. And as I like to say, it's low-hanging fruit that grows back. You know, the incandescent got replaced by the compact fluorescent, which has been replaced by the LED. So let's not forget this in this discussion.
So let me ask you a pointed question. What percentage of the US energy system is decarbonized by 2030?
Not enough. That's what I really worry about, is not enough. It all depends. Are we going to elect Hillary Clinton or Donald Trump? That may be the biggest point of transition.
So we might get into that in a second, although that's a dangerous topic to delve into. Before we go there, the perspective from the finance community, Chris, could you articulate how the finance community is thinking about the energy system and its evolution over the next 13 years?
Sure. Well, maybe I'll start by talking about what I think 2030 could look like, because my background is in tech, so I have somewhat of a tech-biased approach to the next 15 years. And while it seems near, a lot can happen in 15 years that we don't even anticipate. From 99 to when the iPhone came out, I don't think anyone really appreciated how much their personal experience with the phone and the networks could change. We saw a dramatic decline in solar module pricing from 08, 09 to 2013, 2014, which changed people's perspective on the affordability of residential solar. If we have a similar decline in battery technologies, in the costs per kilowatt hour, which can be driven by just manufacturing efficiencies, it can be driven by adoption of EVs, which is also incremental to what 2030 could look like. The decline in price per kilowatt hour could accelerate far beyond what any of us could predict. If that happens, I don't think we'll have 50% decarbonized electricity, although I'd love to. But I could see a significant change in what we think about our cost of energy and really just how we manage energy around the grid more efficiently. And if some of the previous speakers, cities are entering a fourth generation change in how they look and feel. Transportation is really about mobility now, and that's shared car service, it's electric, it's autonomous. Everything, efficiency for sure, all of this needs to play together. I don't know what that picture looks like in 2030, but it's pretty exciting to contemplate a very low energy cost, decarbonized environment.
Chris from Vestas. Chris Vestas, we decided we'd have to call Chris Goldman and Chris Vestas here on stage just for clarity purposes. But Chris, you're obviously one of the biggest proponents of utility scale, clean energy. You guys have shown the way around the world, not only in the US, and I'd love if you could, in your remarks about 2030, to reflect a little bit on the global power shift that's happening as well, and talk a little bit about renewables on a global scale.
Yeah, and I think similar to what my colleagues are saying, I think that we start with this concept of, levelized cost of energy and think it through. I think that if we look at both solar and wind, as Dan was saying, 60% in the last 5 years. So, when you start to extrapolate that, you can get to Chris's, question. I think if we look at, obviously, energy policy and tax policy in the US is a little bit intertwined, and we've gotten some good news recently on the extensions there, including the safe harbor. But I think if you look globally, you look at some of the colleagues yesterday mentioned in Mexico, I think it was essentially it wasn't 4, it was 3.5 cents flat that NL won, and then they won in Morocco at 3 cents flat. You start to think about, okay, what does a post-tax environment look like? And you start to think, okay, how do you add significant parts of it? We focus like a laser on that levelized cost of energy and reducing it as fast as possible. I think when you're starting to think about, okay, well, how do you get there? Obviously, you need some transmission help. You probably got to think about, where the most economic is. You're not going to put in the middle of Jersey, 95-meter towers and 160-meter blades. So I think that's kind of just the basics. I think trying to look on the even further, kind of being on the right side of history, I agree with Dan. I think you're in that, the two in front of us are solar and wind, but you can't do it without, I think, batteries at some point. So, yes, nuclear is a part of the equation, but it's hard to see us get to 2030 permitted and financed and in construction on some of those facilities. So I think we should think about what it costs and what those, and I can see us in a pretty aggressive environment even post the 2020, 2021 period in terms of where we need to be. I think you're going to have a 8 to 10 gigawatt market sustainably in just wind alone. So if you're going to be 8 to 10 or 10 to 12 in solar, I don't know, that's starts getting material.
That's a big number.
I mean, we have 75 gigawatts installed globally, right? So if I start thinking about 2030, it gets pretty big quickly.
You're not going to make a prediction right here?
No.
But I think what was interesting in your comments is how much you talked about tax policy and other policy measures, but you also looped in the economic realities, right? How do policy and technology policy and finance play together with obviously the introduction of technologies and the costs that we've seen that Chris mentioned? Dan, you do a lot of work on this. How do we get to the point where the policy makers are sufficiently informed by the market realities from actors in finance and technology?
Well, I think ultimately, and it's the way people talk in Washington, can we actually level the playing field when it comes to incentives? So, these new tax incentives, the extended tax incentives, the PTC and the ITC, the PTC starts to ramp down in 2017 and the ITC after that. And the question becomes, as they phase out, what's going to replace them? Should anything replace them? And I'm a big fan, if you're really going to level the playing field, let's open up those long-term incentives that don't have to be extended by the Congress that much of the traditional energy industry has used, like master limited partnerships. Put the rest of the the energy industry in line for those. We're increasingly using real estate investment trusts to finance transmission lines. Let's open up these long-standing incentives that can provide, tax beneficial support as these on-again, off-again incentives phase out. And I think if we do that, and this is the much bigger piece of this, we do have to figure out the carbon situation. We tried and failed at cap and trade. The Clean Power Plan is going to be argued in the DC Circuit, sent back by the Supreme Court, but we'll go back to the Supreme Court under either President Trump or President Clinton. It's a big question mark. And ultimately, can we politically get to a tax on carbon, or is that too heavy a lift? I actually think there's going to be increasing bipartisan interest in something like that, a revenue neutral carbon tax like Secretary George Shultz talks about.
But I do think that, if you get to cost, then at some point you don't have to get to policy. And to me,
But $2 gas?
Well, 2 cents a kilowatt hour power from wind and solar. What the hell's the difference?
So it's still tough to compete. Particularly if you have to incorporate the intermittency, if you've got to firm up that 2-cent power. To be honest, that's not really 2-cent power when you look at the cost of firming it up, the cost to the broader grid. And that's what gas, doesn't face, because it's not intermittent. You can throw those things on and off. So if you did a real apples to apples accounting of the cost of each of these electricity supplies, and you ask the cost of firming and a lot of other things, I actually still think renewables would benefit a great deal from a serious price on carbon and access to these long-term financing techniques that everybody else has used for decades.
Yeah, Dan, you're talking about some of the challenges in the financial markets about short-term incentives versus long-term incentives, which you're talking about in a policy context, like MLPs or REITs being available for renewables. But I'm curious, Chris from Goldman, what the financial markets think is the likelihood that some of these structures might actually be introduced into the renewable arena, much like we've seen, the rise and fall of the yield curve over the last 2 years. What is the future for cost of capital and policy enablements that allow investors to think a little bit longer term about some of these big infrastructure questions?
Yeah, first of all, the most important thing in the capital markets is a level of certainty. So when there's peaks and valleys of when we think there's going to be credits or subsidies or incentives, you can't make long-term decisions, right? And we see that with the ITC. The extension was super positive. It just gives you a runway to understand what's going to happen. So that extension is positive. But if it's intermittent policy, it becomes very hard for the financial community to get comfortable modeling out the opportunities.
So is there any chance that we're going to start seeing financial markets, capital markets, thinking beyond the tyranny of the discount rate, as Jeremy Grantham said last night?
I haven't heard that one. MLP rules in renewables, I think, would be positive. I'm not so negatively biased on yieldcos. I think the dynamic of last summer's yieldco collapse was a perfect storm. We had a combination of MLP investors and non-MLP investors investing in renewable companies. The decline in the price of oil, I think, caused just a technical removal of MLP investors or a sale out of those entities. And those who weren't as comfortable or familiar with MLP, the MLP markets or synthetic MLP markets, will trade out in a declining market. And so you had just a perfect storm of decline. And if you can't raise capital at a certain cost, you can't grow, and you can't grow, and you have this negative spiral in yieldcos. So as a source of capital, I actually think it's a good source of capital. Should it be your sole source of capital? No.
Let me quickly add, yieldcos are kind of the dumb little brother of MLPs. They don't have the tax advantages, and they don't have a $500 billion market behind them. And we would not have created yieldcos in this country had the MLP Parity Act that would open up MLPs to renewables, had that been passed by the Congress. We got within a quarter of an inch in December when the ITC and the PTC were enacted, the extensions were enacted, of also putting the MLP broadening on the books. And I think it'll come back. It's got huge broad bipartisan support.
I think that there will be a point where, we're focusing on just the cost of energy, right? I mean, if you look at some of the great utilities, Mid-Am's a perfect example. They want to get to 80% of their load by 2020. I mean, great wind, interesting state dynamics, obviously a lot of tax capacity, but, why can't others be at 80%? I mean, in terms of, and then when we get beyond the tenure of the PTC and it goes away for them and their ratepayers, how do they make sure that the rates don't go up? So ultimately, I think there's a financing mechanism, but we got to get to a point where renewables become the fuel of choice. And that's driving capacity factors and thinking about, where the loads are, figuring out where solar really works and where wind really works, and don't put them where they don't work with each other.
Yeah, technology is at the top of the triangle for a reason.
Yes.
It really is the most fundamental thing. If you can't make that work, everything else is just fluff.
So in that technology, top of the triangle, is it technology that creates a distributed resource grid, or is it technology that is supporting this sort of central station monolithic
Yes and yes.
system we've had for years?
So again, I think that, I don't think it's an either or, right? I mean, obviously, we missed Mr. Kaufman. I think in Brooklyn it works, right, on the distributed model. In San Jose it works. It doesn't work in a state, give me a windy state, North Dakota, South Dakota, you're not going to use DG there. So yes, I mean, it's not the most cost economic model. So again, I think we got to figure out where technology is appropriate and where it can play. We talked about before, there are transmission issues in Illinois and in Indiana and some of those Midwestern states, but there's also capacity constraints in those windier states, including the CREZ line in Texas and the stuff that the guys from Clean Line are trying to do, or SunZia. So I don't know, I think we have to kind of think harder about, let's not just do peanut butter and all the tax works in one area. Let's figure out where the technology is least cost and figure out how to install it.
There's a lot of focus on storage, which I think is warranted, but the other big enabling technology is transmission. We got to spend a lot of time on that. Texas became the dominant wind state for a reason.
Yeah.
They were able to build 3,500 miles of transmission, $7 billion in investment. We've been barely able to cite, a quarter of a mile in the rest of the country.
But is that technology, Dan, or is that policy enabling capital deployment?
It's policy enabling capital, but as Chris and I were talking before this, there's less good and there's better transmission technology. You go to high voltage DC, if you could stick high voltage DC underground like we do gas pipes, you'd have a lot fewer siting issues. Secretary Moniz stepped out a couple of weeks ago and used an authority that hadn't been used before to basically say, we're going to site this thing from Oklahoma and Texas to the southeast. That was a pretty big move. We'll see whether that happens. Otherwise, companies like Clean Line are going to have a real hard time siting 500-mile and 1,000-mile transmission lines.
Well, so here we are as a panel trying to be futurists about 2030. So I'm going to try and push you guys to be futurists about 2030. Chris Budden said a very important point, which is that it's unpredictable what's going to happen with technology. I think we've all said technology is important, but we really don't know what the future holds for it. And yet you also said that the biggest thing the capital markets need is certainty. Well, those obviously conflict. So the question is, how do we get from here to there? What do you, Chris, need from these two guys, from the policy arena and from the technology arena, in order for you to see, big deployments of capital enabling the vision for 2030 where we have a lower carbon energy system?
Policy certainty and technology cost decline. So, when I'm talking about uncertainty, the one thing I am certain about is the price of solar and the price of storage is going to decline. I just don't know what the slope is.
And wind.
So, and wind, for sure.
Dan,
I just don't know the slope.
What do you need from these guys?
Lots and lots of low-cost capital that I can rely on at all stages. Ultimately for big infrastructure projects, but I got to also have capital earlier. I know it's going to be higher cost, but I got to have all that. And I think from the technology companies, and in many senses you're delivering it. We need really reliable technology. The great thing about wind turbines is they've gotten a lot more reliable. They higher capacity factors. But we need even more progress there. And then I need all this enabling technology. I really need storage, and I really need transmission. So with that, I think both these can fly.
Chris, what do you think? Can you do storage and transmission? Can we, as an industry, provide the storage and the transmission that's necessary?
Yeah, look, as a technologist, I think that stuff ultimately becomes easy. You know, if we're moving from a society where we are natural resource extractive to one of technology, the question is really the slope. And so, you know, how fast does storage get more economic, or how fast do we have increases in transmission capacity? And Tony Early talked about it yesterday. I think we're 25 years into the wind business. Solar guys are about the same. You're going to see those slopes continue to decrease, and either the scale or the cost come at them. So I'm not really, we're on the right side of history right now. I mean, you know, that's where we are, and we just have to keep on pushing it. I do believe that there's you know, if you look at the PTC, obviously the rates are kind of high from a cost of capital standpoint. So 8-9% in a 2% environment, that's pretty lucrative. So we have to think through that, and that could take a lot of costs out.
I'd add one thing, and I do think we're going to also see a very exciting cost curve, as I said, with offshore wind. And it's going to finally get somewhat real for people when the project in New Jersey is online. Admittedly expensive, but I think there's a very steep cost curve on that. The other thing I think is we talk about storage, and I think too often it's synonymous with batteries. That's good for minutes or a few hours. We really got to also get to things that work for days or weeks or a month, you know, to seasonal variations and all that. So we need a lot of different kinds of storage technologies, and that may take us into heat. You know, you heard Secretary Chu talk about fuels. You know, there's a whole set of storage technologies that I think the technologists have got to continue to push on.
So we haven't done a very good job in 20 minutes of covering the entire energy system, including transportation, but maybe someone in the audience wants to ask a question. So let's open it up for the audience to ask a question of these sort of reluctant futurists. Anybody?
We're in the back there.
Hi, Pam Cargill with KLSD. So I'm having a tough time wrapping my head around this nuclear conversation. So there's a lot of talk about nuclear energy has to be part of this, you know, clean energy future. Yet we keep talking about the cost curves of wind and solar precipitously dropping. And dropping very fast, but that's not happening with nuclear power. So can we spend a second just tying a bow around this a little bit?
Well, let's go to Chris.
So
Do you compete with nuclear?
No. I think at the end of the day, I think nuclear is all about climate, right? So if we're trying to solve the climate equation, from a cost standpoint, sorry, I forgot your name. I'm not there at all. I mean, some of our biggest clients are nukes, but Vogtle was not cheap, right? So when you step back from that, how do you get something by 2030? You don't. How do you get something by 2050? Perhaps.
So let me quickly say, there's two different kinds of nuclear situation. One is the existing 100,000 megawatts in the US. Remember, 100,000 megawatts at a 90% or an 80% capacity factor, the equivalent of that in solar and wind is 300,000 or 400,000. More solar and wind than we've built globally. So that's a pretty big hole if all those shut down, as they pretty much have to, given their age, by 2030. So that's a big hole. We got to think about that at least. How you replace all that base load, 80 or 90% capacity factor with 25 and 35%.
I think we can do 200 onshore and 100 offshore. We can get there.
Great, I'd love it. But that still doesn't do it. Well, anyway, the second is the next generation of reactors, which is, I think, more relevant. And absolutely, the jury is still out on the cost. The South Koreans have made some progress bringing costs down. There are some new reactor technologies. And we got to get to the policy and finance angles. You know, the state public utility commissions really have to decide how they're going to price in the firming off of intermittent sources like solar and wind. When you start to price that in, and equally important, maybe more important, as we really get serious about a price on carbon, so the full zero carbon value of nuclear gets put into the equation, the economics begin to change. So if you do a real apples to apples comparison, I'm not saying we're there today, but this task force to Secretary Moniz may have a little bit to say on that, I hope.
So unfortunately, I'm not sure we're putting a bow around the nuclear question as you described, nor are we putting a bow around a lot of the other questions about 2030, but just in sort of 3 to 5 words from each of you, what's this panel going to be called in 2030?
What's it called today?
Limited. We probably didn't talk enough about beyond 2030. Because I got to figure out how to get to 2030. Beyond is hard.
So maybe it's beyond 2030. Thank you all.